Hi, this is Randy Finney with the right side of the chart, and today is Thursday, February 19th, 2015. In this video, I wanted to cover the rare earth stocks as well as the ETF that's currently an active trade on the site REMX, which that ETF just tracks this index we're looking at here. This is it's on the web page. The URL is www.STOXX.com. This is the STOXX Global Rare Earth Index, and what it does is the description up here, if you look at the top of the page, shows it just tracks the performance of companies that generate a good deal of their revenues from the rare earth sector. So they may be, in the business of mining, extracting, transporting, processing, or anything related to these 17 rare earth elements or rare earth metals. I collectively call them the IMs. They all end in IUM. So there's a look at the metals. This is the index, and as you can see here, that index had pretty much an all-out crash since the highs back in 2011. At this point, I'm trying to get the cursor up here. The index peaked out at a high of 623. That's in the upper right-hand corner of this chart here. And just recently, that index came down, and here it is as low as 22 and change. You have to hit the cursor right on it. So you can see pretty much a crash off the top and then just a vicious extended bear market. So I think a case can be made here technically that a bottom, just like most commodities, oil included, we're closer to a bottom and quite possibly have seen the bottom, the end of those bear markets. And I remain bullish on commodities. Select commodities, but for the most part, just about every commodity sector, whether hard, soft commodities, I think have a good chance of outperforming equities in 2015. So let's just zoom in real quick on this chart and look at the more recent price action. This is a 6-month chart, and I'll go ahead and change this to a candlestick setting. And just take a look at the price action leading into the recent lows in the STOXX index. A lot of back-to-back red candlesticks. This is just indicative of a downtrend or a bear market. But more recently, since the lows in early February, you can see here we do have a trend reversal. Obviously, a near-term trend reversal. It's still much too early to call this the end of a bear market and a new bull market. We just don't have the evidence in place to do so yet. But with that being said, I'm seeing some bullish price action. You can see this large green candlestick here, big move up off the bottom, followed by a little sideways action, some consolidation, pretty much a bull flag, I should say, and then boom, an impulsive move out, another big green candlestick. We haven't seen bullish candlesticks like that in a long time in this index. And more importantly, we've recently taken out these mid-January highs. So this is the index, and let's go ahead and look at the ETF that tracks this index, which is how most of us, at least here in the U.S. or with access to the REMX ETF, can play this index. Okay, this is REMX, the Market Vectors Rare Earth Strategic Metals ETF. As I mentioned, that was put on the site as an active trade recently. We'll zoom into the action. Let's just zoom out real quick here. Take a look at a longer term. This is a long-term time frame, going back 4 years since that ETF has been around. And let's go back to the daily chart. This is what was posted on the site. So what we have here are a few things. Most importantly, we have strong bullish divergences on just about every indicator, price oscillator, momentum indicators, etc., leading into the recent lows. So here's a MACD, RSI, money flows, and this, if you take a look at these two downtrend lines here, these white downtrend lines, that's really representative of a bullish falling wedge, or at the very least this downtrend line, which was taken out. And then you can see down here in the recent lows, prices came down to make about an equal low. If you look at this prior low, let's zoom in a little bit here. That'll help. So we put the crosshairs and we made roughly an equal low, almost a triple bottom, 1, 2, 3 here. Either way, you can draw a nice cup or a bowl under here. But bottom line, this is consolidation, possible bottoming action. A few months back I had mentioned this, prices were consolidating here, and I actually had REMX as a long trade setup on a break over this level, and it never did trigger. So that's one example of not jumping the gun. It looked good. Prices were consolidating, but they fell out, broke down from the bottom of that consolidation range. Hence, we never triggered a long, and that trade was just moved. That setup as all untriggered trades on right side of the chart, that gets moved to the uncategorized section. That chart is still there to reference, but it never triggered an entry, so it never became an active trade. So here we are. We moved with it a little bit lower. That set up this bullish falling wedge pattern, breakout, back test, nice triple bottom lows. And I had on the site recently, this was a level that I was watching. This was a resistance level that was taken out. Then I put the trade ID up on the site, and I mentioned this is R1. That was on the chart. And R1 means resistance 1, or first level of resistance that I see above. And if you look closely, we zoom in. I have not modified these lines. It's that original chart. This is just technical analysis at its finest. The REMX punched up through their intraday. That's why you see this wick on the candlestick here. But managed prices managed to close back below that resistance level. So we had an intraday, but not a closing breakout. Prices closed back down. And, considering the scope of this move, it's not huge, but just let's take a look from here to here. What is that, about less than 2 weeks? If we look at the left-hand side here, the index gained about 12%. Yeah, if I go to the highs, almost 13%. So it's taken a breather. That's all. That's not natural price action. Maybe bull flagging here. This line below, obviously somewhere around 25.50. That's the support level. And I'd expect maybe a little consolidation. And then the next long entry will be on a break above that R1 level. And then I have my first target here, second target, this downtrend line, and ultimately the third target here. Let's take a look at a little bit cleaner chart if we can. Okay, this is REMX on my stock charts account. Little white chart, a little easier to see, a little fewer annotations. But essentially, these are all the same levels. I will, as soon as possible, I've been extremely busy in the last week with programming changes, updates, improvements to the site, some issues we run into, and that's where a lot of my time has been. So as soon as I get a chance, I'll get this chart up with a live link on the site, as well as some of the individual rare earth stocks that I'm going to talk about here shortly. So from where we're at right now, this is the first target level. The next target level comes in currently around 30, but again, that's when you have a downtrend line, that's a moving target. So when I have trade ideas and I list a downtrend line or an uptrend line as a target, it's a moving target, changes every day. So where and when that comes in, my guess somewhere called around the 29 level. We'll just have to watch that, assuming that we do get a breakout above T1. But if and when we do, which I expect, that'll be a bullish move. And this is a pretty significant downtrend line. So depending whether you're a short-term or long-term trader, shorter-term, more active traders may decide to book some profits, at least on the initial tag of that T2 level, and maybe re-enter once it punches through. A long-term investor looking for a bottom in these rare stocks may want to be scaling in at this point with a stop somewhat just below these recent lows, scale in, and upon a solid, and sustained breakout, possibly a back test of that T2 level, that's where I'd look to add to a full long-term swing or trend position. But once again, I put multiple targets because every trader has different trading styles and time frames, etc. So T3 is currently my final target. T3 is defined by the bottom of that I had mentioned earlier when REMX was a trade idea a few months back. This was the consolidation zone that I had talked about. And the bottom of that consolidation zone is a pretty formidable resistance area. But again, once we see the breakout above this downtrend line, that in the eyes of many technicians, traders, signals an end to the previous downtrend and possibly a new bull market or new uptrend. With that being said, I'm not trying to give contradicting evidence here. I'm just making a point that we'll probably see a reaction off there. Prices come back in, but ultimately we can go a lot higher, and I have some longer term target levels listed here. And just to give you an idea, I've marked on here, it may be hard to make out depending on what size monitor you're watching this on or if you're watching in high definition or not, but that's roughly from current levels where it looks like an objective re-entry you're at on here back around the 26 level. That's about a 28% gain or move up to that third and current final target. Once again, as this is both a short-term swing trade or a typical trade idea on the site, as well as a long-term trade, i.e. investment setup, there's a good chance that I will be extending targets if and when we get through here and break above this downtrend line. I'll probably add some additional upside targets there. So again, this chart will be posted on the site soon. Actually, before we move on to the individual stocks, which I'll get to in just a second here, I wanted to point out another key level to watch on REMX. This red line, we're now looking at a weekly time frame chart. Now, this only goes back a few years because that ETF has only been trading since, you can see here, looks like 2011, late 2010, somewhere around there. The red line is the 40-week exponential moving average. Now that's the same as a 200-day moving average on a daily time frame chart. And this EMA has done just a heck of a job defining both. It's not fully populated here. If it were, you would see it under here acting as support. I've looked at another chart, so it was support. Once that line broke, then you see this big red candlestick back here in 2011, and then boom, right smash through there. And since then, that 40-week moving average has acted as resistance from below. We've had this test here, a near test there, perfect test of it there, another perfect test of it there, and failure, another test of it there, and a failure. So what we're looking at here, again, making the case for a longer term case for a swing trade lasting many months, possibly years or more, would be both a break of that break above that 40-week weekly moving average or 200-day moving average. Ideally, you want to see that a solid weekly close, maybe even 2 weekly candlesticks closes above that on a weekly time frame. But we're also going to have this downtrend line that comes in together. So my expectation here, if we start to see prices move up, let's just say they trend up over the next few weeks, and these near-term targets are hit, you'll start to see this 40-week EMA curl up, and it's going to come in pretty darn close with this downtrend line. And in trading, I like nothing more than when I see a well-defined downtrend line come in with a moving average, whether it's an EMA, SMA, doesn't matter the period. If I see a moving average that has done just a heck of a job acting as support and resistance, and that moving average comes in with either a horizontal or especially a downtrend or uptrend line resistance level, and you get a breakout or breakdown of both in close proximity, that is usually an excellent buy signal. One theory I have is that some traders might be watching the downtrend line. They're big downtrend line traders. Other traders focus on moving averages, and technical analysis is all about the majority of people watching this stock bullish or bearish at the time. So either way, when I have these different support or resistance levels line up, it just helps make a case to be long or short. And in this case, I'm right now making a longer term bullish case, a potentially bullish case for REMX. Okay, now I'll quickly go through the names. As mentioned the other day, this is my watch list. There may be a few others out there, and if anybody who follows the site, if you happen to follow any of the rare earth stocks that trade on the U.S. exchanges, doesn't necessarily mean these companies are U.S. based, also, although some might be. I believe the majority are. But as I mentioned, the REMX, the vast majority of the stocks are non-U.S. based, as most of the rare earth minerals come from countries outside the U.S. So you're going to have global exposure, to the sector, much more diversified exposure. And now, for those of you who are more experienced, active, aggressive traders, I told you my tactic here. I do own REMX. I have it across some of my longer-term accounts, IRAs. I'm scaling in as a long-term trade, and in my trading account, I have pretty much taken a shotgun approach of nearly all of the individual names I've been scaling into for the last couple of weeks here, and I'm going to go through those real quick. This is GMO, General Molly. What we're looking at here, There's a nice downtrend line that's been in place on that one. At least I have this downtrend line starting here in early 2013. And so that is a key level I'm looking at. I also have, that wasn't shown here all the way on the chart. I also have this previous reaction low back from the 2009 when the bull market and equities bottomed out, or the bear market ended and the new bull market started. That's a significant reaction low. And if you notice, that low comes in with these recent, we're finding resistance recently. We broke below that level. I'm sure there were a lot of traders looking to position long. I might have even taken a shot long off there. We had this, what looks like a bullish candlestick, breakdown. Looks like GMO found support, but then it broke support. And is so often the case, shortly after that, you see capitulation, big selling, giant. Look at the size of that red candlestick, followed by another one. So we had to move down. I mean, if you just try to quantify it, even from right here down there, that's, goodness, that is a 56% drop, and that's below the breakdown level. But as I mentioned, the price action in the last few weeks or months here has been nothing but extremely bullish on many of these stocks. Here's one candlestick, a weekly candlestick. If I can nail the bottom of that here, in 1 week, GMO went up 120%. Keep in mind, this is a penny stock. These stocks, many of these names in the rare sector were priced for oblivion, bankruptcy, as if they'll never be here. And that very well may be the case. We've had such a bear market and prices have been down on the metals for so long that some of these companies may go away. And that's why I cannot continue to reiterate how aggressive it is if you're trading these individual names, and make sure you don't put any too much money into any one stock, any amount of money that you can't afford to lose. Because if you wake up one day and you find out this company has declared, filed for Chapter 11, it's going down from 49 cents to 3 cents. So just be careful and size accordingly. But if you look at the potential for upside gains, many of these I'm measuring it in triple digits. Looking at potential even from this point, 3, 4, 500% on a lot of these stocks if the industry can turn around. So, with that being said, if you're not sure what you're doing, stick with the ETF. So what I'm looking at, that's this resistance line marks that previous reaction low back from 2009. We've had boom, 1, 2, 3. This is 4, 5 failed attempts to get through there. That's normal. That's going to be a big resistance level from above. However, if and when that level goes, just as I mentioned with REMX, we're looking at two different resistance levels coming around the same area here. We have this downtrend line intersecting that horizontal support line. So a breakout above that level, should GMO be able to take out 65 and do so, somewhere around here, or take out 65 in the near future and then also come in and take out this downtrend line, which currently comes in around 70. That would be a great longer term, buy signal on GMO. So let's go ahead and move on to the next one. RTI, another great looking chart. This is a weekly chart, 10-year weekly chart. So we're looking at the support shelf, which really formed, I can zoom in a little bit. We don't have to be back 10 years, but we had these lows back in late 2011. There's a candlestick kiss off there, several tags there, and more recently we came close to it there. So on a weekly chart, this is a support shelf that so far RTI has held. Now on the daily chart, I often talk about how bullish or bearish it can be when a stock triggers a breakdown of a well-watched, well-formed pattern, and then that breakdown is shortly, reversed. An example of that, a Head and Shoulders breakdowns. I mean, we had a couple of those since this bull market began in 2009. We had perfectly formed Head and Shoulders. I mean, they were even talking about these things on Bloomberg, CNBC, and we had, breakdown, all the shorts piled in, and then those patterns just turned around. Prices moved up shortly after the breakdown and exploded higher. What happens when you have these well-watched patterns like this ascending, broadening wedge? The technical measurement on that pattern, if you take the move leading down to it, subtract that or add that, I'd have to even move the chart up here, that projected somewhere down here around the $19 area, that pattern. And what happened is we had a clear breakout of the pattern just recently on the daily chart, some impulsive selling, and then all of a sudden, boom, prices reverse and absolutely exploded higher. And this is, again, we're only talking a couple months here. And if you look on the left-hand side, that's about a 40, over a 40% move since the lows right here just in mid-January. So we're talking 1 month, 40% gain. We had this false breakdown. When that did happen, it's not drawn here. I can draw this real quickly. We had some bullish divergences. Prices on RTI made a lower low. So we look at that price, that trend line. I'm sorry, and you look at the MACD here, the RSI below. I don't have to draw it out. You can see that if you draw these trend lines, the money flows. So bullish, positive divergence at the lows, a false breakdown, and prices exploded higher. Now, naturally, RTI isn't going to go up forever. This reaction high was a key and is a key resistance level. So prices have come up quite a bit. I wouldn't be chasing this right here. I'm long this one, but I'm not going to add until that level is clearly taken out. So the next buy signal on RTI would be either a solid breakout of here, preferably after a little bit of consolidation or sideways action, or maybe a pullback. You could also add on to a pullback to here to this reaction high right here around the 26 level. I'd have to really study this chart a little bit more, but that might be an objective add-on area. And again, longer term, this and all these other stocks still look good. And just to flip back to that weekly chart I was on, I wanted to add this. Here's a downtrend line off the highs back in 2007. That comes in with that horizontal resistance level, that reaction high that we just hit on the daily chart as well. So again, looking at the longer term case, short term, near term, this is not objective to add to RTI here if you don't already own some. Either wait for a pullback or a break, especially longer term traders looking to position. This is a company, again, when you use technical analysis and you trade as many stocks as I do, I don't have the time to read the balance sheets and do all the homework on the fundamentals. At times I will. But in this case, there's just too many of these. I let the charts speak. And this is one, if you notice, this stock held up in price. This isn't a penny stock. During the crash, the financial crisis, this stock made it into the single digits, but stayed well above penny stock range and never even crossed below the $5 range either. So it looks, I imagine the fundamentals are somewhat solid in this company. So for those of you that want to avoid trading those, sub $1 stocks that I'm going to talk about here, this is one, especially for longer term investors, that has promise. If and when that trend line goes, you have a reaction high here around 36.50 as well as this previous reaction high back there, so 43. So that would be my longer term swing target, anywhere from 36 up to $40, and then we'll take it from there if this one starts to play out. Okay, moving on to the next one. This is TC, Thompson Creek Metals Company. This one was added, I believe, just yesterday as a trade setup. We're looking now at a 10-year weekly chart, so a long-term view of what TC has done. Here's a downtrend line to watch, and we're quite a ways away from it. Looking at a weekly chart, I should add this. I see horizontal support right about here. We have these previous reaction lows back in late 2008, it looks like, and then a support shelf here. We tested, finally broke. Kind of moved through it recently, but that's still a level to watch. Now, if Thompson Creek does what I think it will, I think this one has room to run. A lot of these names that I'll talk on here, such as GMO and RTI, and there's quite a few others, they've already exploded. Thompson Creek still, it's remained above that $1 share price, so you wouldn't have the delisting worries to worry about most stocks. If they trade under $1 a share for too long, they're going to get delisted, or unless they have to do a reverse split. So far TC's held up there, and if we can get up here, that's the first resistance level on the weekly chart to watch. There's that line above there, but I think this one has room to run, and at some point can get back up here. Over time work its way back up to the $4, maybe $5 range. Again, right now I'm focusing on the daily chart. This is the chart that was shared yesterday in the trade setup. This is the downtrend line that I'm watching. I'm watching for a breakout. We have bullish divergences across the board. Pretty well-defined downtrend line to look at. target zone right here. It's the first target zone. It's defined by these reaction highs here, the reaction low, reaction low there, and this is the second target zone. Again, I'll try to update some exact suggested sell levels, but you can replicate these charts on your own. My preference is to probably take profits closer to the top of this target zone versus the bottom of it, at least as of now. And like all these other trade ideas, if and when this one starts to play out, I see a lot of upside potential, and this would be my next target level. T3 would be up here just above the $3 level. That's TC. Okay, moving on. This is QRM, Quest Rare Mineral. Another strap in and hold on. This one's just been on fire lately. You can talk about a penny stock. Recently this stock traded down as low as 7 cents or so right here. We're looking at this is a 10-year weekly chart. So, that stock was, back here. I'm sorry, I should say over here. In 2011, it was about what is that? Almost a $10 stock, 9 and change, all the way down to a penny stock. I use a log scale. If I was not using a log scale, this is what that chart would look like. So keep in mind what you're dealing with, when you're looking at a log scale. Now, I've highlighted here the 40-week moving average again, which is the 200-day moving average. So this is another setup where I'm seeing nice downtrend line resistance coming in place with a moving average that has really capped the advances on this thing, or really capped the upside advances in throughout this bear market in QRM. So what we're looking at currently here, it's struggling with that 40-week moving average. If it can take that out and take out this uptrend line, this one can easily, in my opinion, at least the first near-term target, I should clarify, would be right here, 40 cents. It's 18 cents now, so we break out at 20. That's a double. That's 100% return on your money. And I think from there, again, assuming that a bottom has been pounded out in the sector, or even we have one heck of a bear market rally. We could have a rally all the way up to here and still be in a longer term secular bear market in the rare metals. I doubt that. This one's been in place for what I'd say 4 or 5 years now. So QRM, the next stop would be around that dollar level. It looks about 90 cents. Again, I wouldn't be adding here. We've had a heck of a rip. Let's just zoom down to the daily chart. This is what I was watching and trading. This line we can take away. Here was a nice, well-defined downtrend line. And just to step on a side note, this is what I'm excited about having set up that new Twitter feed on the account now. There's a good number of trades that I take that aren't posted on the site because they may be speculative positions. They may happen very fast. I get price alerts on some of these. And by the time I get that alert, put the trade in, because remember, first and foremost, I'm a trader. I'm not generating any revenue from this site, at least not at this point in time. If and when that point comes, which should be in the near future, I will give a priority to getting these messages out, these trade signals, trade ideas out to the subscribers. But as of now, it takes a good 20 minutes from alert signal to mock up a chart, annotate it, upload it, and all that good stuff, and get the post out there. So with Twitter now, I can just send out a tweet, hey, watching QRM had a breakout, take a look at the chart. And more advanced traders can take a look at a daily chart. I can maybe just identify what I'm seeing, and you could have drawn this downtrend line. But like I said, that one got away so fast in just a few days. Here's a stock that went from just a few weeks ago. That stock's gone up 228%. And I wouldn't be surprised to see it go up another 228%. So this is the first resistance level that I'm looking at. We stopped just shy of it. Don't know if you can make it out here. I'll highlight it a little better. Okay. Yeah, there you can see it now. There's the 200-day moving average, which I just talked on a minute ago on the weekly chart. It's the 40-week moving average. And as you can see, QRM pierced that intraday, but has yet to close above it. Failed and closed exactly, right on that line yesterday. So it's pulling back. For those looking to position, these were the lines I've had on QRM forever, and you can see we hammered right off this support line. So again, had I not been so busy, I would have had some of these charts out more recently, but that was a nice support shelf, and that would have been a good entry at $16. And still, we're only at 18. However, we're pinched. This is sort of what I call no man's land. We're just above support and just below resistance. So, you could take it here, certainly with a stop a little bit below 15. You got to be a little flexible on these because of the volatility. That a lot of these are lower priced, very low priced, and lower volume stocks. So if you have a stop hanging in there, stop loss at 15, there's a good chance the market makers are going to see it and come and get it and take your shares from you. So active traders have the luxury of just watching a stock, not having that stop loss order out there and manually deciding to let it go if it breaks support. So also note the volume. Volume has been very nice on this recent advance. So there's another one. This was your first resistance level, the 200-day moving average. Then this R1 level I have here, that's about $25. And then my first target, which I expect this stock to hit within the next, I'll say weeks or a couple months here. I think there's a good shot it's running up to that 40 level, which again is 100% return from where it's at right now. TROX, I don't have a strong opinion on this one. TROX, TRNX, I guess you call it. That one looks to be in this almost a symmetrical triangle pattern. These things can break either way. Obviously, I'm bullish on the sector, so I would look for an upside resolution so you can replicate that pattern and certainly take a long entry on a solid break above that, the upper end, the top of the triangle there. And targets I'd have to determine, but I'd say assuming the sector is doing well, I don't see a problem challenging that previous reaction high up there around 31, although I could see it stopping, pausing, or having pulling back around 28, somewhere around there along the way. This is AVL, Avalon Rare Metals. I'm in this one as well. This is a weekly chart here, downtrend line. I really haven't adjusted this weekly chart in a while, so let me do this now. I didn't have time to prepare all these charts for this video. That's sort of what we're looking at here. I'd chop off these that reaction there, that little spike through. So it looks like we're just now challenging. We've taken out prices are look to be going to close right about on that that weekly downtrend line today. Like a lot of these other ones, here's that red line is the 40-week moving average, which again, just look how it's done a great job. It was defining or acting as support leading up to the highs in the bull market in AVL. And since that stock broke down, every major advance has been capped and failed at the 40-week moving average. So again, I think these stocks have the potential to explode here. Even personally, if I didn't own this, I'd have no problem taking this, even though the stock has moved up. Let's see here. Just in the let's move that. Last week or so, what is that, 125% return? And again, if we look at where the stock has come from and where it can be going, I think the return potential is still a lot greater. So you just have to be careful. In the near term, because the stock has doubled in just a week or so, it's a little bit overbought in the near term. But if you look at the longer term picture, how oversold we are looking at this 10-year weekly chart, there's a lot of upside potential, especially once that stock has taken out this bear market downtrend line and that 40-week moving average. Don't pay too much attention to these targets now. They might have been downside targets for short trades before. They are resistance levels, but they're not official targets by any means. And in fact, if I were to add one here, as I'm doing this, I would see some resistance about right here. Call it the $48 area. That might actually mesh up with what I have over here. This is my daily chart. These aren't official. I'll try to get these on the sites. I want you guys to look at this now since this sector is so hot and moving so fast. Bullish divergence is at the lows. So go ahead and replicate these, trade them as you want, or stay away, just watch them. If you're, as I said, if you're new to trading, not very experienced, or not comfortable with high volatile stocks, just watch this sector. Okay, winding down, this is the second to last one here. This is REE. These rare stocks are like my children. I love them all. Can't really pick a favorite, and that's why I've taken the shotgun approach. REE has run up, had a tremendous move just in the last couple weeks, as you can see here. Went from about 20-something cents, low 20s, up to $1 a share. So a heck of a move in these. And again, the longer term picture looks bullish. However, near term, if you don't own this one now, I wouldn't be adding here. What we're looking at, again, it's a common theme here. The 40-week moving average has pretty much defined this bear market. And prices overshot it. We had this weekly, candlestick. Now, REE is a little bit tricky. If you look back here in, late 2013, we had one solid or somewhat a close above, a candlestick break and close above, and then another move quite higher, and that turned out to be a bull trap. Bull trap, I should say. The bulls piled in more than likely, and that stock then, after failing to keep or maintain above the 40-week moving average, had fallen quite a bit. But if you look back every other time, we've failed right at that level since this bear market began. This was an intra-week break. If you zoom in intra-week, you can look at the candlestick wick, but the body is below, meaning prices close below. And now what have we done here? Yes, so far this week we have broken out. And this, again, folks, I can't over-impress how important it is to watch, multiple resistance levels, try to incorporate moving averages, other things into your trading, because those traders that were using the break of the 200-day moving averages, their buy signal and they're all clear that maybe a new bull market is underway. They were not paying attention to this downtrend line, which can, I think, clearly be drawn off these highs back in 2011. So what happened there is, yes, it looked like bullish price action once that 40-week moving average was taken out, but prices ran into the downtrend line. So now we've taken out one resistance, although we're right back there. In fact, we're probably a little bit below that. We can look at the daily chart and just look at the 200-day moving average. But what we need to do is take out that level. There's also, a lot of stocks. The $1 level is very important, as I mentioned, for delisting requirements, etc. Anything below is technically a penny stock. So now we're looking at support. I would probably put it just above $1. In fact, to be safe, that recent high. Here's the recent reaction low, that recent high this week so far, and that level comes in at, you can call it 106, somewhere around there. So to be safe, a longer-term trader, add a couple pennies to that, call it 110. I think it'd be safe to say either an intraday break, a daily close, a weekly close. The longer you wait for confirmation, the lower chance you have of that breakout failing. However, and these stocks are fast moving. If you wait, if that stock takes out 108, 110, it can keep running. Now, ideally, with the move that we've had recently, again, nothing would be more healthy to see a little bit of consolidation, sideways action for the next few days, even few weeks. Even if it took a few months. Keep an eye on these downtrend lines. And again, so short-term traders, trade these as you may. Use the 60-minute charts, the daily charts. This is my daily chart here. I had this descending broadening wedge pattern I was watching. Prices move sharply off the bottom of that. We're at, let's move that away. This one's run up. As I mentioned, huge gains in just the last couple of weeks, about over 300%. In the last week or two here on that one. So we broke out. We moved from the bottom of that pattern all the way to the top. And again, this is beautiful technical analysis. You can see the descending broadening wedge. You can see once we broke out, look how bullish that candlestick was in one day. That's the move that we had. And now I had this other downtrend line, this yellow downtrend line. We took that one out too. There's that 40-week moving average, 200-day moving average line right here. We briefly shot above it for a day, fell back. Now we're coming in to backtest this. So again, this speaks to the fact if you're an active trader, you can certainly take a long position right here on the backtest of this downtrend line with a stop not too far below, and maybe target a move up to this T1 level because we fell just short of my first target level, which, by the way, that's the actual resistance is at 114. I'll be booking some profits just shy of that. We fell a little bit shy of my target, so I'm still in that one. In hindsight, I would have loved to have gotten out at 109 the other day, but I'm looking to get about 112 or so on that. And then once again, I'll wait to see what it does from there, and hopefully reposition back in that for longer term. So that is REE. Okay, to wrap this up, MCP, this is a daily chart. My apologies, this one has not been cleaned up. These are old notes from that stock before. This was a descending price channel. Prices broke down through the bottom of that channel very impulsively, but then rocketed back up into the channel and above and hit this first target that I had here, and that was defined by this support shelf right here. So that one has run into resistance. But like most of these others, has strong bullish divergences leading into the lows here. Let's take a look, see if I have the weekly chart mocked up. Yep, yes I do. MCP, again, there's that key 40-week moving average. That's going to be a level to watch, as well as this downtrend line. So these stocks, you know, from my read on these charts, they've come up a lot. I think they're going to work their way. They're going to be very tough to hold on to and trade, because there's going to be a lot of choppy price action. When you have stocks that go up 10, 20% a day, as they have been recently, you have to expect givebacks that are going to measure in the double digits. In other words, drops of 10% plus a day. So again, active traders, trade off the intraday charts, use what you can. These stocks are just too fast for me to post all my intraday trades and thoughts on what I'm thinking here. I might tweet some of those trades out or what I'm seeing there, but longer term traders, take a look at this, because once we take out this downtrend line that currently comes in around $2, we'll have already taken out that 40-week moving average, and I would be highly confident that MCP will visit at least this 450-ish area over time. So even so by the time we took that out, even if we took it out now, we're still looking at over 100% return, and that downtrend line is going to continue lower, so we may break it, above $2 or below $2. Okay, this has been Randy Finney with Right Side of the Chart. Hope you found it useful.